Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. What is it? The 12th, the 13th? The 13th day of April. Man, April, we're almost halfway through. Got another big rally going on in the gold and silver markets. I'll say it. We've been saying it for I don't know how long. If you want to pay more, wait longer. I'm just telling you. You want to pay more, wait longer. Briefly today, we did get above the previous all-time record high close. We're back below it right now, but I don't know if it's today, tomorrow, next week, after the Fed meeting. New record high in gold prices are coming. The question is going to be, how high is it going to go after that? This was all driven today on economic data that says things are slowing down on the jobs market and then the producer prices. So remember, yesterday we got the consumer price and the headline number was low, 5%. The core number, though, was high. Matter of fact, the core actually rose month over month. Today, Jason, it was the producer prices. We'll get to all of that data, plus the jobs data here in a minute. But our toll-free number, 800-951-0592. Of course, the website at allamericangold.com and the physical delivery of silver and gold. We do a little platinum blend. By the way, all of you that did that platinum palladium trade that I told you to do. Remember, I told you sell your palladium and buy platinum. Palladium is down almost $500 since we've made that call. Platinum is up about $50, $60, $70, and I think platinum is going higher. I would not be surprised, Jason, by the end of the year, we'll see platinum above palladium before the end of this year, as we're looking at supply deficits now in platinum. And then same thing like rhodium too. Rhodium has been down heavily as well. Those are kind of the other metals. We don't talk a lot about them, but I know there's some of you that follow that. I expect that trend to continue. I expect more pressure on palladium and rhodium and higher prices on platinum, silver, and gold as this year unfolds.
Yeah, palladium was above gold for quite a while there, and platinum traditionally had been above gold for such a long time. So we do the best we can to look at all the news on this stuff, Joe. But it's very possible that because palladium and platinum is used industrially, that you could see platinum eventually take off and go back above gold. We can't guarantee it. I don't see anything that says it's going to do that, but these metals are used. They're used heavily for many things, and since platinum is down, right? I guess what's going to take the place of that industrial use, and platinum and palladium kind of are interchangeable in a lot of ways. So platinum might be on its way up big time.
Well, again, history. If you did it by what's more in the Earth's crust, right? Platinum. There's less platinum than there is gold. Right. So that's kind of, why normally platinum is, if you take the four metals, rhodium, even less of that. Right. So rhodium tends to be the highest metal, then platinum, then gold, then palladium, then silver. At some point, it'll probably get back to there again. It'll be a while. I think that what we've seen happen in those other metals is a lot of the palladium that was readily available. And palladium, for people that don't know, they use it a lot with catalytic converters as far as emissions. Here in the U.S., we use platinum. But take China, the largest car market in the world, they use palladium. As Jason said, a lot of this can be interchanged. And then solar. All of those metals, they use a little bit in that solar environment. It was what had happened, and it was just a unique situation. It's kind of run its course now. A lot of the platinum mines also had palladium in it. And what they were doing was knowingly over mining the platinum to get to that palladium, because they were paying so much for the palladium It made it worth it. Now we've gotten some more palladium, mainly palladium mines come online, and now they're not over to producing the platinum anymore, and that's why we're seeing the price moves that we're seeing.
Correct. And then, of course, supply and demand. If there's just less platinum, eventually that'll move the price because there's just only so much of it. Just like with all these things, there's only so much of it available.
Yep. This is the first year in, I don't even know, 4 or 5 years that we're actually going to have a platinum deficit. So this is why the price has moved. But so there you have the other white meat, if you will, right? The other metals. We'll try to we'll do our best at least once a month to at least give you guys an update on those other metals. But the news of the day, it started with the producer price index. It was anticipated to be up 0.5%. Jason, the headline, again, this was a headline shocker number, down 0.5%. I'll say this one's not going to last, but it was fueled by cheap oil prices that let it down. Obviously, cheap oil is gone. I know here in Arizona, gas prices started to skyrocket on us in March, and this is a March number. But I think that had more to do with we get our gas from these California refineries, and it actually had to do with gas prices. But now, Jason, gas prices are kind of rising everywhere. Matter of fact, here I just had to fill up this morning 15 gallons of gas. It's over $70 again.
I have a feeling it's going to keep going up in the future too. it's going to go up.
Yeah. So when we get back, we'll go over that and jobs and what happened. (800-951-0592). Joe and Jason, Patriot Radio News Hour on this Thursday. A quick look here at the markets. The Dow is up 145 points. And get ready for this. Any data points that come out that say, hey, one more rate hike or no more rate hikes is going to be viewed positively. The S&P is up 25. The NASDAQ's up 150. Gold's up 30. It's been up higher than that today as well. 2040. The television contract, 2054, right? So right now, the June contract is what they're showing on the TV because it's the most heavily traded. Silver's on a tear, up another 40 cents here, 25.83. Silver got above $26 earlier today. And again, I expect to see silver with a 3 handle. And how high into the 3 handle before the end of the year, we'll see. But I think $30, I would not be surprised to see 35. Heck, right now, I probably wouldn't be surprised to see 40 when it comes to silver. This market recap brought to you by our friends at Y-Refi. Listen, if you're frustrated with being tied to Wall Street, if you don't want to ride the roller coaster, check them out. Another way, we always say you got to be diversified. Every single person in America needs to have gold and silver in their portfolio. Really, everybody in the world needs to have it. It's a must-have. Right now, you need to be more allocated to it than maybe ever before. You got to have money in Wall Street. Right? You got 401ks and stuff. We get that. But again, maybe have another bucket here where it's not tied to Wall Street. Hey, I don't have to worry about Jay Powell making a mistake. I don't have to worry about an escalation in World War III or the next idiotic policy coming out of the White House. Check them out. You can get up to 10.25%. You heard me right, 10.25% fixed. Check it out, investYRefi.com. That's the word invest, the letter Y, REFY.com, or call them at 888-YREFI24. Remember, you got to have at least 50 grand. The nice part, though, if you got an IRA or something, you can use that as that as well. So check those guys out. But Jason, it has been a very interesting last couple of days, right? Because all the signs, at least for the last 48 hours, say that it's either one more hike or no more hikes, right? One or the other. The producer price, just to give you an idea of why I said Wall Street shouldn't get too happy on this, 80% of the decline had to do with just gasoline prices. Apparently, everywhere but Arizona, gas prices fell all over the country in March. They said that gas prices fell 12% in the month of March. That really fueled it. Then they said also that diesel fuel, natural gas, jet fuel, electric power, all of that kind of contributed to the rest of it. And Jason, obviously, when looking at crude oil, like today, crude oil is 83 and change. We're going to see that probably reverse itself next month. The good part, I guess if there's a good part, the Fed doesn't have to worry about that data point because they'll have had the meeting before the next PPI report comes out. So that will be one of the factors. And then jobless claims. This one is, I'm starting to get a little worried. I'm not there yet, but this is the one we've got to keep our eye on. Now, they admitted, remember last week, right, Jason? They admitted, said, you know what? We've been giving you the wrong jobless claims data. We had this seasonal adjustment factor, and, well, it was a little off. And they essentially redid 9 weeks of jobless claims, all of it higher, 40 to 50,000. Last week, the number was 228,000. By the way, that was the low number in the cycle. Today, not as low, 239,000. So this is starting to get elevated. And remember that 250 to 270,000 area is where you start to get worried. So we're right next to it here. 239,000 people filed for unemployment claims for the very first time. The number that really I was really looking at was continuing claims. After this new adjustment, the continuing claims number right under 2 million, just under 2 million people. In other words, hey, I got fired or I got laid off. A couple of weeks have gone by and I'm still laid off. Has remained very, very elevated. And now they came out with this chart and they were talking about the data points when it comes to jobs. And they took a continuing claim snapshot by state. Okay, let's look at all 50 states. Kind of a way they say, well, that's a little more stable because, in a week-to-week number, you could have a state, hey, a plant shut down, something, a big company went under. You could have a state where all of a sudden for a week or two, that number gets real high. But when you take all the states together, here's what they came up. They have this chart. And they measure continuing jobless claims. Every time that number gets above about 1.7 million, and this chart, by the way, goes all the way back to the 90s. So this is a pretty good looking amount of time, 30 plus years of data. Every time, within a matter of months, all of a sudden we get these, what I'll call a super spike in these claims. It happened in 2001. Remember the 2001 recession. Obviously, it happened during the financial crisis. Then it happened again with the COVID metrics. And back in the 90s, remember that recession that got Bill Clinton elected? It happened then as well. And right now, the continuing claims number is now higher than it was in any of those other 4 instances. And you think about, those are 4 pretty big instances, right? You had the mild recession of the early 90s, the 01 recession. Remember that one? Right? Alan Greenspan brought interest rates to 1%. And then they blamed that for the housing thing, remember? It was 1% for like 9 months. Obviously, we don't need to talk about the financial crisis. And we know about COVID, don't we? We find out what they just spent us into oblivion. Jason, this is another one of these signs. Be careful here. Remember how we tell you, right? How did you go bankrupt? Well, it was gradual at first. And we've been kind of on this gradual, haven't we? Just a little, it's a little worse. But it was still real good. A little worse, but still good. A little worse, but still good. But then all of a sudden, and Jason, that's what I'm worried. Are we going to get one of these all of a sudden moments?
Yeah, continuing jobless claims going up is shows one thing, I think, more than anything else, Joe, which is people are trying to actually get the jobs now. I think the last couple of years with COVID checks and things, people being encouraged just to sit at home, that can breed a kind of a bad habit when you actually have to pay some bills. And so right now, how many times have I seen on the news, hey, you're going to get less on your tax return checks and this and that because all the freebie stuff is filtered through. And now some businesses are closing down. Workers are being released from these big corporations, and people have inflation to contend with. Here's the one thing: it always, right now with what's going on, it's the inflation. And maybe you can get away with working the 20-hour week, or maybe a couple of people in the household didn't have to work. Well, now everybody has to work. Everybody has to pitch in because you have extra bills that are higher. That same gallon of gas costs more. That same basket of food at the grocery store costs more. And so the higher continuing jobless claims, Joe, shows that people are trying to get it. They're trying to get it and they can't. That's maybe worse than
exactly
the jobless claims and everything else, right, Joe?
So we'll keep it. Hey, it's something to be worried about. Let's see where it heads. Right now, listen, if next week we see a number, that's near 250, we probably need to get a little more worried, right? And anything above that, then we've got to worry without a doubt, especially if we see continuing claims continue to rise, right? If we see them go above 2 million, right? Because that's kind of the area where usually things start to spiral from there. Yesterday, we talked about, was there going to be 2 dissenters from the last Fed meeting, that March Fed meeting? There was rumors out that there was going to be 2 dissenters. We got the minutes after we were off the air yesterday afternoon. The minutes came out. We did not get 2 dissenters. It was another 9-0. However, this is kind of idiotic. Several participants, they said several, which to me says, hey, more than 2 people, right? Because, if it was, it wouldn't have been a couple, maybe a few, but several to me means more than 2. That's just me, but that's the word they use. They want several participants wanted it noted in the minutes that they had considered whether it would be appropriate to leave rates unchanged. Now, of course, these participants noted the action, but yet still voted for the rate increase, Jason. It's kind of an interesting, that's kind of like, I want my cake and I want to eat it too, right? I'm going to put my foot half in, but not all the way in. And that just tells you the ridiculousness of this. Obviously, if you were worried about it, you should have voted against it.
That's what a vote is, I guess, right?
Right? Isn't that right?
Well, you're supposed to vote what you think is the best thing or the best candidate or whatever you're voting for. And but I guess showing a united Fed is more important. Maybe that's the lesson learned here, Joey. We must be
That's right.
united so that everyone knows that we know what we're doing. We understand.
That way we
we're
can
locked
be
in.
wrong all together, right? Strength in numbers, right? Yeah. How about this, though? I need to point this out. How high is gold going? Participants agreed. So this one sounds like they all agreed. Because 2 Fed meetings ago, remember, they created a new word. Disinflation, remember? All of them agreed. There is little evidence pointing to disinflation. So think about this, right? Remember Jay Powell came out, what was it now, about 10 weeks ago, gave the big press conference, said the word disinflation every other minute. And now today, well, that was wrong. And I only bring that up because how many more mistakes are these guys going to make? And I'm going to tell you right now, this is why you're seeing gold and silver doing what it's doing. And this is why you're seeing China grabbing a bigger share of the world stage, because everybody else sees it too.